Hello and welcome to Crypto Weeklies. In this video, we are going to discuss Injective and its ticker INJ. None of the content financial advice. Right now, the price of INJ is at around $4.74. It does have that breakout from that double bottom or triple bottom from that October 2025 low, which again was at around that bottom in February 2026, and the price reeled around at that $2.75 level. Today we discuss INJ for two reasons. First, of its because of its recent rally, to see how far this rally can go in terms of the short term and the long term implication using data based models. Coming to our website, cryptoweeklies.com, link on the bottom of your screen. This is the crypto heat map available at the home page under indicator sections. In this heat map, what you see that over here, the last 24 hours INJ is the leading crypto. Over the last 7 days as well, number 2 spot amongst its peers. Amongst the last 30 days, again number 2 spots, up about 57%. Over the last 90 days as well, 58% rallying. That makes it a crypto of the day normalized across 4 distinct time periods based on the recent activity. Coming back to the price action and how it relates to the 200-week simple moving average. This blue line, when it turns white, that means the price is lower than the 200-week simple moving average. This has been the case since that October 2025 drop. 200-week simple moving average for INJ is currently at around slightly under $13. You can see the good thing about INJ is that it has been around for quite a bit now. Launched in 2020, had witnessed the 2022 bear market, and did make a new all-time high early on in the cycle in 2024 March itself, in that first alt season for the crypto asset class. That's where when Bitcoin had this breakout, and then INJ again made its new all-time high back in that time period at around $50. Although the December 2024 high wasn't that meaningful in terms of creating a new high, it was a lower high, a distinct lower high, and then again a drop in that March 2025 drop, and then August rally did form that another new high. If we go by these highs that INJ has created across, again they do not align perfectly on a straight line, but if we take a midpoint of them, maybe not using this zone, right, rather than that, maybe create a channel for those positions. Let's create a parallel channel using these mechanics to identify where the price action is. Let's say this is the top of the channel for that rally. The base of the channel is, let's say, somewhere wider base over here, so that we try to come up with as many data points as possible. So per this descending yellow line, again, it at least the price has started to come up in this channel. The top of this lower high structure channel is at around $7.70. The price is currently almost 50% lower than that. If we further analyze the behavior using the Fibonacci levels drawn from the 2021 high to the 2022 low, the 2022 bottom for INJ was slightly above a dollar level. From those levels, again, the Fibonacci level at 0.236 Fib level is at around slightly under $7. It's at around $6.80. There has been this again, these are the daily levels, but if we go back to the weekly candles, the 20-week simple moving average has been broken out. The price is above the 20-week simple moving average and the 21-week exponential average moving average, which is typically a good sign for a breakout. If, let's say, this holds and this trend goes to this blue line, which is the 50-week simple moving average, that's where the price could meet some resistance at around $7.75. That you can see in 2025 August, the blue line, the 50-week simple moving average, provided that resistance. The 20-week simple moving average is at around $3.64, and the 21-week exponential moving average is at around $4.31. This confluence I get at around the top of the channel over here is at around $7.50. There has been, at the monthly candle level, there has been this breakout. And if we go back to the momentum candles to analyze this bear market with respect to the previous bear market, this formation over here is quite a bit promising at this stage of the bear market, where one could say that after spending a prolonged time period, this is the phase one, and again this was a phase one over here. This is the larger phase two after this 3 to 4 months of bullishness. The larger phase two is essentially again different over here. There were a couple of bullish candles along the way, as one would expect in the post halving year, and now in the bear market year, the price action has suffered the first 2 to 3 months till about April in this bearish phase, and now May has been this first breakout month, which was analogous to this October 2022 to November 2022 time period in the last bear market. Coming back to the models on our own website, link on the bottom of your screen, all the models are available for free, no signups or anything required. The first model of most importance over here is the time weighted average price model, the TWAP analysis to short. This white line over here is the time weighted average price line. This is the gravity of time based explanation of what is the value or historical baseline value that is created for INJ for years worth of trading. This is not just a simple moving average. It measures conviction of a asset over time rather than temporary volatility. This is derived by taking average of each daily price, and then proportionally speaking, the deviation between the price and the time weighted average price is used to assign these color codes, and the color codes correspond to these risk levels. Typically, when the price is in risk level 1, it's either the price is either very close to the time weighted average price or below the time weighted average price. Just because the price is below the time weighted average price doesn't mean that the price cannot go below it. In the last bear market, there was a delta of about 85%. That means the time weighted average price at around $7.78. The price was at around $1. That means price was lower by 85% compared to the time weighted average price. Nonetheless, accumulating below the time weighted average price, let's say 40-50% below, like it was at in that February drop, when the time weighted average price grew from that $7 level to almost $12 level, and the difference between the price and the time weighted average price was 76%. Now the difference is still greater than 50%, with that time weighted average price closer to $11.38. Again, it has had that lower slope, and again this can be understood by, again, time weighted average price is a, what you can say, it's kind of like a magnet, which is again if a consistent trend for the price is downwards, the slope of the time weighted average price ever so slightly moves to that direction, and whenever that price action over here, which is again, let's say risk level 8, 9 or 10, when that occurs, then the time weighted average price gets lifted up like a magnet to the ever so slightly, not like a candle wick or something, which is like a temporary phase in the asset class. Again, if a sustained uptrend is needed to create an upswing, a sustained downtrend is needed to create a downswing. So as the price has been consistently below the $12 level since October 2025, the time weighted average price has also gone down from the $12.18 to now about $11.38. Not too dissimilar with the last bear market as well, where the time weighted average price declined from about $9.33 to about $6.13. So we are in that phase, but nonetheless, there is, in terms of the time weighted average price delta and the price, it's still greater than 57% or greater than 50%, which we would like to see. This is the first model. The second model that we would like to discuss is the regression based mathematically derived fair value. The pink line over here attempts in a non-linear fashion, using its own price action. The pink line tries to cut the price action into two halves. The top half is when the price is overvalued. The bottom half is when the price is undervalued. This is using the mathematical regression function. Typically in the bear market, whenever the price is one standard deviation residual or one lower band drawn from the fair value, not just undervalued but greater than one standard deviation residual undervalued, is when best accumulation time period open up for INJ. This has been the case in and was the case in that panic drop of February 2026. Right now, that scenario is anytime, if that kind of scenario manifests itself, is anytime price goes sub $3.50. The price is from that $3.60 level. If we take the price level over here, what would it take for the price to drop to those levels? It would be for that $3.50 entry point. It would require about a 25% drop, or going back to the bottom of this yellow channel, which again is more likely to happen in the next half or the second half of 2026, where again, if let's say there are some X amount of weeks where the price goes and stays in this channel, the yellow channel, and again ultimately goes down to test these levels over here at around $2.70. That is a distinct possibility. In terms of the machine learning based time series forecast, if let's say we use the historical price action at a weekly level to come up with what could happen with some confidence, again 68% confidence over here, what is a non-panic bear case for INJ in the next 6 months, these models say that again anything around $2 is a possibility. If let's say all of the next 6 months are bearish, but let's say if only 3 of them are bearish, let's say from here May, June, mid-May to mid-June, mid-June to mid-July, and mid-July to mid-August, if 3 months are bearish, then the floor for INJ is at around $2.55, which is again closer to that prior drop over here at $2.65 to $2.70. So that's a possibility. If let's say in the short term there is a rally, the ceiling for this rally till about May 2026, end of May, is at around $7. If let's say it goes in the first couple of weeks of June as well, that ceiling shift to about $8 level. All in all, if we were to tune out the noise of any individual risk-based model and come up with an aggregated bear market scenario for INJ, let's see if we have that model. Yeah, INJ over here, the time, all of the models, the time weighted average price risk, the 20-week simple moving average risk, and the regression risk weighted together. The weighted risk is at 0.41. The base bear target for INJ is at around $2.96. That is roughly speaking from here 38% down. If we take the current price action, that is not only the base case but also the panic case. And if let's say anything worse were to happen, the worst case scenario as forecasted by these models is at around $2.91. This is a tuned out mathematical model. So the accumulation territory for INJ per the time weighted average price has opened up. Regression risk stays relatively low, but it's not in that deep undervaluation zone. So that's the summary for now. If we were to conclude on a hopeful note, where let's say we roll the clock forward in 2027-2028 time period, if everything goes well and INJ were to reclaim some of the highs that it did, like it did from 2021 rally to the 2024 rally, the non-euphoria peaks estimation, or let's say the grounded bull case scenarios for those time periods is somewhere between $34 and $36. Just flipping the models that we used for the determining the bear case to determine the bull case, that's about a 7x from here. If the price action were to bottom at around $3, a rally from $3 to $35 would be somewhere between 11 to 12x. With that, hope you enjoyed the content. If you did, please give a like and subscribe, and stay connected with the channel, and leverage the cryptoweeklies.com website for your own research. Thank you and have a nice day. Bye bye.